Welcome back to Market Day Report. All right, let's jump into the markets. We're up in trading, but the equities is where we'll start. Dow, NASDAQ, and S&P. What's happening? Well, Dow right now is in lower territory. Yeah, we saw some strength for 2 consecutive sessions, but Dow is lower this morning. The NASDAQ, when you look at these three, for the past 30 days, the Dow has been down 6.2%. NASDAQ has been down 11.2%. And what about the S&P? S&P down 7.6%. So definitely giving back some of the gains that we saw from 2024. It's a perfect segue into what's happening in the row crops. We're a tick higher on new crop December corn at 454 1/4. When we look at beans, November half penny higher at 10.19. We've seen a lot of strength, however, from the wheat market. We're off of the highs with July now trading 587 3/4, up 2 3/4 cents. Hard red really has led the charge. It's up 5 3/4 cents at 623 1/2. And then spring wheat December, new crop there, 661 1/2, penny and a half higher. And the cotton market, December contract off 22 points, 69.64. But really want to draw your attention to the old crop, May, down 19, and make that 21 lower at 66.77. In studio with us, Chris Swift. Chris is with Swift Trading. Chris, great to see you.
Good morning.
You know, when we look at those grain markets, it's been a wild ride here this month.
It has. And, you know, what we're looking at, all of them, especially beans and corn, kind of in a bear market right now. They've had a big move down and then consolidated. So now we're all left to sit there. Do we sell that consolidation, or do we look for it to kind of grow again a little bit? And we're betwixt and between right now. We're not real sure. But what we look at is the overall trends. Energies are a little bit negative. Have seen them kind of in a small downtrend. Other markets in small downtrends. You mentioned the equities there too. So we're kind of leaning more towards maybe we resume that downtrend, but we have some aspects and some positions on that would say if the market does rally, we're going to be okay with that. If it continues down, we might be in a little bit of trouble because we haven't done much hedging with it at these levels. They're not very attractive levels to the producer out there, and we know we made some sales back 4 weeks ago, 5 weeks ago, kind of towards the end of February when we had rallied up there. So it's kind of in limbo right now. And wheat, you did mention wheat there. That's a big rally in wheat. So wheat had set new contract lows in the Chicago, very close to it, if not in the Kansas City. This has been about a 35 cent rally. Big coming in, wheat's going to start growing now. Any moisture that comes in should really benefit it greatly. So I would say maybe make some precautionary sales on that wheat.
I will tell you, I had a chance to see some wheat last weekend across the southern plains, Texas, Oklahoma, and the irrigated wheat looks really good.
Yeah.
Now, that dry land just depends on where you're at, but we have emerged now, and wheat's off to the races.
Oh, absolutely. And they've pretty much taken cattle off of them. If they're going to raise the wheat crop, cattle are gone now. So, yeah, I think you're right. It's there's not much less, but just a little bit of moisture. So.
All right, speaking of cattle, how about we take a break? We'll come back in a moment, and we'll talk about cattle. Livestock markets next. Market Day Report continues in a moment. So cash cattle will probably help drive our live cattle market throughout the week, or at least the thought of cash cattle. Again, we were higher last week. We'll talk more about that in a moment. Live cattle futures this morning, where are we opening? Well, we're in the red right now. The April at 204.30 is down 72. Interesting to note, live cattle market has had 4 consecutive higher closes, trying to make it 5 today. Over at the feeder side, they've been higher 3 consecutive weeks. March contract, or 3 weeks, 3 days, 3 sessions. That front month down 40 at 284.22, and the April at 283.62. It's off 57. And finally, over to the hog market. Hogs under a bit of pressure this morning. April at 87.70, it's off 37. after really having a strong day yesterday. We've got Chris Swift here with Swift Trading. All right, livestock markets, this is your wheelhouse. What are you watching?
Well, right now we're still watching the cash markets, of course, but the most interesting aspect this week is taking place in the feeder cattle futures, for which we return back to a negative basis. Most all futures contracts are now trading above the current feeder cattle index. The feeder cattle index did set a new all-time high last week, kind of carried a little bit further this past one that we've got. So that's what we're looking at right now. It's just a little bit more in the feeder cattle market than we are the fat, and the reason being the feeders have gone up a significant more amount than the fat cattle have. So we're crushing our margins in there to the cattle feeder. We're not seeing any kind of decrease in feed cost, cost of gain going in. So it's still very difficult for that. And then we all wonder, how are we going to push that out into the consumer? We've seen lower and lower aspects of the restaurants. We've seen downturn in February for the restaurants. We know that beef sales at the grocery stores have kind of plateaued, and we're unable now to justify any kind of beef demand through boxes because they've cut the slaughter pace down so low. Naturally, we have less supply out there, so they're elevating that price and manipulating. And again, we've discussed that before many times. Manipulation in this market, which every sector is doing, is a really bad way to have to perform. Everybody's having to do something different than what they used to try to find that margin, and the reliance on a consecutively higher price. You mentioned 3 days in a row. It's been about 2 weeks in a row where we've moved up approximately $20, $21 in the feeders and a little over 16 in the fat cattle. So that's just the futures, not the cash. But still in all, those are big moves that we see in there, and it always puts people backwards the market in some cases. It advances others in some cases, but all in all, when you look at it from the general aspect, the industry is in a real manipulative manner right now.
And with about a minute left, we've had a lot of outside money coming into the marketplace. Is that a good thing to have? Does that provide the liquidity that we need for markets?
Yes, absolutely. We have to have that, and as much as we may dislike it or how it impacts us on that, market being higher, market being lower, they do not create the fundamentals. All they can do is exaggerate them, and they do a very good job of exaggerating them, but they don't create the fundamentals. So that exaggeration sometimes can benefit others greatly, a little bit of a detriment to others at other times, but really and truly, they're a must in there for that liquidity.
Perfect. Don't you love when Chris is here? We do. Chris Swift is with Swift Trading, and we'll see you again soon.
Yes, Thursday, I think.
And that's a day before we'll get the cattle on feed report.
Yep.
That comes out at 3 o'clock Eastern time on Friday.
Gotcha. So nice to have a guest live and in person right here, right?
Absolutely, especially Chris.
There you go.
We love it.